Your CPA loves the S-Corp, and so does the IRS. Let me show you. Your S-Corp is trash. The S-Corp, this is a particular example of a client that I had that did $100 million a year in profit. Now the problem with this is that his $100 million a year in profit, he wanted to take his income, as one does. The problem with that is that a CPA told him to take a $40 million wage and a $60 million distribution. So that means he had a 40-60 split, is what they call it. Well, he was in California, so that means that all of that income was taxed, which brought a total of $52.2 million to the IRS. Outrageous, right? Because it's taxed to a Social Security number. Here is the better structure. We're going to use a trust structure. We're going to operate out of the business trust that has a $100 million profit, and we're going to distribute that to the beneficiary. Well, who's the beneficiary, you might ask? That's going to be the irrevocable spendthrift trust. This has a federal EIN, and it files taxes just like every other entity, but it files the 1041, not the 1040. Now, we're going to pass only the money that we need to him because he only has to pay for fun, food, fashion that's taxable. Everything else is an investment for this trust, meaning the only tax liability that he has is for fun, food, fashion expenses. Guys, if you want to know how to go from $52.2 million a year in taxes to $7.4 million max in taxes, I can show you guys. All you got to do is comment trust down below or book a call with me up in my bio.